Hello guys, glad to have you on board again today. I'm going to make this one real quick, probably one of the shortest ever video I will ever make on Pro Indicators daily reviews. Today I'll just do and stick to the essential, just a warning to whoever is a beginner in trading, and moreover I'm just going to say warning to every fucking one, me included. Obviously my professional account today is closed and will remain as such all day long. No position taking all along this day. We rarely see that kind of day. We can expect higher volatility. It can be the kind of day in which the VIX explodes to 80 or levels you've never seen in your probably entire history as a trader. So we're into expected context to be kind of a falling knife. So I'm just going to sum up informations that may be taking place today. First of all, you forget about any technical below than the weekly charts. For a simple reason, what happens today or what could happen today will have weekly chart implications. So either we're going to hold things up on the SPX. The euro area has been breaking major supports today, or trying to break them. So we'll see how it goes. But we've got high level of risk today, higher than ever. Wall Street can be a bloodbath today. I don't really think it will be, but there is a very high level of risk for this to be. And if it happens to be the case, if you press any button, you're going to have to struggle sufficient losses, subsequent losses. So this warning has just one goal: to avoid you taking those losses. If you have time to watch today's session, I strongly suggest you do, because it's going to be highly educational. But you don't necessarily need to take trades today to learn from today's session. It can be real brutal, and if it happens to be the case, then we were prepared for this for multiple reasons. First of all, we've got the ETF demand volume still showing some really dangerous structures in here. I remind you about that. This chart you should already know about. We've been making those warnings long ago, and they might be at play today. So what we have in here is basically the ETF volume. Okay, so ETF volume is on the green line. The SPX is on the black line. So if you just move on those two, you'll see that the ETF volume, instead of dropping, has been buying. So retail traders buying the stock market when it's overvalued, and as you can see, volume has been sharply increasing recently. So we've got a bullish momentum on ETF versus SPX, which means SPX has been mostly supported by retail traders, and that's a big concern. It means that this pullback we had, yes, it's orchestrated, it's probably just a fake rebound. So the only question I'm wondering today is, what's going to happen? Either we're going to drag more of those ETF volume in to kind of save the support one more time. Option number two, we go for a nice wreck down. And you can expect something like that to happen, which means ETF volume going down, SPX volume down as well, which means breaking those supports and heading to the next one we've been highlighting for quite some time already. So if we do this, the question is, how the markets will react. I expect gold to explode, and obviously everything that is going to be against dollars, so US dollar, US oil, silver, gas, everything that is pricing against the dollar is going to explode. Everything that is pricing in dollar will fall. So the T-bonds will just probably explode as well, because everybody's going to seek for safe haven. So you can expect the 10-year yields to just drop to levels we've never seen. We're already minus 6% on 10-year yields, and the session hasn't been started yet. So yes, highest level of risk you've ever seen. People asking for safe haven as we're trading support. So instead of buying, people are getting safe haven. So we'll see how it goes. But I would suggest high problems and huge problems ahead. Because if we break down major supports, and if we have no institutional buyers, because if institutions are heading into safer areas instead of buying the stock market, and if worse than that, we tend to have retail traders selling ETF, some kind of panic selling, then guess what's going to happen? Tesla's, Apple, Microsoft, Google, all the big names, they are going to fall like knives. It's basically going to be a bloodbath. We were prepared for this, so don't say I didn't say that already, don't say I'm saying this today. It's been in the plans for weeks from now, not to say month. We saw that, we said the day we'll have the bearish replicate and the day the retail traders will sell their ETFs, it's going to be panic selling. So everything's here for a bloodbath doesn't mean it's going to happen. Because you know how Wall Street works, at some time when panic is down the road, they're buying it out. This is what's been happening all years long for 10 years. The question is it going to be working one more time? I don't have the answer. Today is going to bring that answer. All I can tell, if you see ETF volume going out, retail traders panicking, Wall Street closing for extreme pricing, if you see futures quotations stopping because of protection for volatility, then you know the worst is there. And it was expectable some way. If it shows up, first of all, you go to weekly charts and you don't trade anything else than weekly levels. And I suggest you just don't trade at all. So if this happens, let the knife fall. We could be into a 1987 replicate, which means if you're trying to catch the bottom, you can very well suffer enormous drops on your equities. So don't buy anything. That's rule number one. Don't try to catch the knife. If it falls today, we can very well make minus 15%. Wouldn't necessarily be big of a deal. And if we do that, if you try to catch it thinking it's going to be the bottom, if we do make an additional 15% drop tomorrow, what are you going to do? So think smart. And I think right now, not losing is already a smart decision. So what I'm teaching you guys to do is always the same thing. If you want to catch someone else's money in the market, generally just not making the stupidest decision is more than enough to do so. You're generally going to take someone else who's making even more stupid decisions, and you're going to take their money. What we're doing here is, I think there's only stupid decisions to take today. So I suggest you will probably trade versus robots, who's going to take faster decisions than you do, probably more rational decision in those contexts. And I suggest you don't press any button. So today's warning is not just for beginners, it's basically for any trader in there. If the bloodbath shows up, get the fucking hell out of here. Get your eyes on that screen. It's gonna be beautiful to see. But if you dare pressing any button related to trading, be aware that this is nothing close to trading. Some people will make huge amounts of money, but people who've been preparing for this already. For now, all my accounts are closed, which means all I have is already in place. If for some reasons this triggers, and if the dollar falls apart, then all my USD dollars trades will trigger accordingly. My USD JPY will probably get me reached by tonight. But that's how it's going to be. If that's the case, then great. But all I have running right now in my account is my weekly scenarios. Anything I have short-term is out. Off the table. No short-term trades, nothing like that. And I'm not going to press a button until probably a week from now if bloodbath is triggering today. If we do just fine, then great. We'll have saved the queen one more time. But I hope it's going to be the case. I don't want to have a carnage showing up today in Wall Street, but if it happens, don't come cry. This is why I'm doing this warning. Not to scare you out, just to make you assessing the real risks underlying right now, because that's my job. And to be clear, highest level of risk I've ever seen since Trump's election. And to be clear, back then, when Trump's election showed up, we knew that the long-term trends were still supporting, which means that if Trump were to disappoint the market back then, I would have bought anyway at lower prices. I would have just wait for further downside to buy. Because the trend were still intact, the long-term trends. Now we've made wave fives, we're out of bullish trends, so it means if bear market shows up, it was expectable at this point. So be aware of the risks. Don't say it's a decision that's already made. Nothing is for sure in trading. All I can tell you for sure today is going to be tricky. It's going to be volatile, so any short-term trades is going to be flushed instantly. If you're making gain in such markets, it is no gain, it is gambling, and I hope you're going to gamble in the right side. If you gamble in the wrong side, you're going to take massive losses, and I expect that most of you guys will probably do that at some point, because beginners tend to take stupid decisions, and I'd rather like you to take no decisions at all today. So close your accounts, open your eyes, and take the most rational decision that you can make today. Just do nothing. Bye guys, see you tomorrow for further news. It's still same thing, it goes in here for cryptocurrencies and everything. Money is going to move today, it's going to move fast, it's going to move at the milliseconds kind of time frame. It can be chaotic, and if that's the case, don't try to fight a game, you're probably going to lose. Bye bye, and trade safe, meaning no trading at all.